Hey everyone, this is Chris. Welcome back to the channel. So the market is crashing today. I'm sure you know. We had some classes on Friday because basically Jerome Powell said, hey everyone.
It's going to be pain, more pain, sustained pain, longer pain, and just lots of, you know what, pain.
And he was really serious about this actually, was short and sweet and serious about the pain. And we're seeing the pain the next 3 days. People in the market are just like, you know what, I don't want to deal with this pain. I'm not handling it. I'm just getting out. And we got a lot of selling pressure going on. We'll see how long this goes. It's anyone's guess. My opinion is we may re-see the June lows. You know, headline after headline is negative. Plus, the Fed is raising interest rates. We know that, and we know growth is slowing in the USA. The other thing is, too, is in China, there's a headline that's massive, and this is why I'm making the video right now. Country Garden, which is the largest property developer in China, their profits went down 96%. I think this should be the top story right now. That is massive. You know, they went from profiting 2 billion to now profiting 88 million. From billions to millions, down 96%. That's a big deal. And that's the largest property developer. And before last year, where we had a big scare, was when Evergrande essentially had, there's like, hey, we can't repay our bonds, and then we can't finish our properties that we're building, and suddenly, you know, now we have these people boycotting their mortgages in China. That's the number 2 property developer. So now the 1 and number 2 are financial distress. You know, I have no comment on the other ones, but I would assume that they're also experiencing financial distress. So this could be widespread. The other thing is too is that growth in China is slowing as a whole. I've told you guys about this before. I get it. You know, there's other YouTube channels that are like really pumping up Chinese stocks, and these are people that have never lived in China, don't speak Chinese, let alone study China, and yet like suddenly they're like telling you, oh my God, you got to invest in Chinese stocks, and they'll say stuff like, oh, you know, growth in China, but you know, yes, China did grow in the past. In fact, I was there during the hyper growth right before the Olympics in Beijing, and it was a great time. That was the late 2000s. A great time to be in China, and in fact, the growth continued, but you know, things don't grow forever. You got to slow it at some point. It just goes in cycles. And I can tell you, I'm here in Korea right now, and growth in Asia is a little bit of a scare. One of the things is that, just talking about Korea now, birth rates in Korea are really, really low. In fact, just give you some comparison, in USA, for every woman, the birth rate, it's something like 1.64. So a woman has 1.64 children, where here in Korea, birth rate is like more like 0.83, so it's under 1. It's actually a big problem. And in China is a similar situation to where things are just getting a little bit more expensive. People are having less kids. You have less growth there. And also too, you know, one of the things that people are super bullish on China, so property developers, this was back in, you know, the Beijing, it started back in the Olympic era, which was like 2000, where people were just building tons and tons of buildings thinking that everything was going to boom up for forever. And essentially they overbuilt, the same way that you could say in our stock market, people just thought, oh yeah, stocks are going to run forever, and just throwing on this free stimulus money, and everything's going up and up and up. But eventually things cool off. And you know, the other thing is too is we're all connected. So one of the things is, like, think of it this way: if it is true that, you know, our U.S. economy is slowing, which it is, and if consumers are cutting back on our purchases because the cost of money is you know, different now, we can't get that free financing. If we're buying less things, then therefore they're more likely going to make less things in China, right? Too, and also too, if the Chinese middle class is also cutting back, they're going to, you know, essentially need less things as well. Now, on the positive note, you could say, Chris, you don't know what you're talking about. This whole property developer thing, this whole mortgage thing is all going to work itself out, because you know what, the Chinese bank is going to encourage people to borrow more money and put money into the system. And you know, the thing is this we're all connected, because like Chinese people aren't necessarily going to make money in a vacuum. They need to ship their goods to other countries, right? And if other countries aren't buying stuff, it's like, so for example, in Europe, you know, with the war in Ukraine, it's very true. European countries also take goods in from China, but if their economy is slowing, they're not going to be buying so much stuff from China either. And also too, you have some European companies were actually boycotting Chinese companies because they were unhappy that China was supporting Russia in the war in Ukraine. I want to emphasize that we're all connected. Now, we don't necessarily have the Lehman Brothers sort of housing crash kind of thing here in USA like we did in the past, 0809, because we changed our laws. But in China, it is a freer market than you may or may not know. Now, freer in a sense of like, things will just go like crazy, meaning corruption is free, free reign for everyone. You know, sometimes companies can just cheat customers and get away with it. So it's free in a different way, free to cheat people, essentially, is the way I think about it. The other thing too is in terms of more bad news, I just saw a headline which is kind of crazy. that we have the first fatality from monkeypox here in the USA. That's coming out of Texas. I don't have any details other than that. There's monkeypox, and by the time this hits the YouTubes, you may have some more details. So please share in the comments about the whole monkeypox thing. But I don't know if we necessarily be scared about that, but it's just a piling on of bad news. In terms of like the actual numbers of the market, so if you take a look at June, I'm just looking at the chart myself, and I'm not much of a chart reader. I can read the chart. I know how to read charts, not hard. But if stocks come down to say what we saw before at 3,600, maybe they're interesting again. However, instead of reading charts, not something I focus on. I look at earnings per share, just your basic PE ratios, this kind of thing. And basically, what you want to do if you are interested in stocks is just find companies that you feel like are decent valuations, meaning that when you look at the company, you look at their projected growth of what the CEOs are saying and sort of what the company's projecting, and you say, okay, is my PE ratio make sense for the type of growth that they're expecting? And this is also reality, which I always thought was strange that the market was rallying the last month or so, and I've been mentioning to you guys several times in this channel that when companies are reporting, say like Best Buy is a good example that we sold a bunch of TVs during the pandemic and now we're not going to sell any, or Peloton or Zoom are like we had a whole bunch of business in the pandemic and now it's not happening anymore. Or like a Coinbase and a Robinhood, where all these people are trading during the pandemic and now it's not happening anymore. There was this company after company after company was saying basically we just aren't having the boom like we did, and there weren't that many companies that were just saying, we're making even more money than we did before. And so it doesn't necessarily mean our market's going to go crashy crash, not necessarily, because as I think the market has shown, it has actually been quite resilient. So there will be some sort of levels to where this is real. Apple is going to make money regardless of what happens in the world. They're going to make money. The thing is like at what level where they make money? Where are they going to be like going crazy profits? Are they going to be going just flat profits? Maybe the profits will be down, but they're still going to make money. And I always just want to emphasize with these as well is like when you do look at stocks, just understand over time, yes, stocks do go up over time if you're in good companies. Just the way that it is that we generate money, companies pay you. You donate money into say your 401k and they'll match that kind of stuff. People keep saving for retirement, and some people don't touch this stuff for like 20 years. So people will keep putting money into stocks. However, just be aware that there may be more downside ahead because according to the Buffett indicator, you could make the case that we're like 43% overvalued. According to the Shiller P ratio, you could make the case that we're like 100%, basically 2 times of what stocks should be worth. But it's hard to say exactly where stocks are going to be. The basic thing that I'm looking for, and I've been mentioning over and over and over again, when is the Fed going to stop raising interest rates, right? That's something that I'm watching. Also looking at what's going on with inflation. It's funny because the markets were rallying that they were happy that inflation went from like 9.5 to say 8.5, like as if 8 is a good inflation, and the Fed wants inflation to be at 2%, which they think is a reasonable rate, and so we're still 6 percentage points away from that. In order to get inflation under control, it's going to be tough because one, you could say get supply chain rolling again, but the Fed can't really do anything about that. And I've been telling you guys over and over again, wages are keep going up, and that creates inflation because as people have more money, they have more money to buy things and drives price up. You guys get this idea, and so I still remain bearish, but I also want to keep it real. I want you guys to do well in the market, and best advice is always stay diversified. Pay attention to news. Be a smart investor in these things. And also, too, if you're in blue chippers, like I said, companies are going to continue to make money, but that doesn't necessarily mean you buy at any price. So, simple example of that, whenever I make a video about Tesla or look at the price of Tesla, I'm just like, guys, man, this thing is crazy. Are you crazy? And, people are essentially buying consumer product stocks, like a Tesla, going into a recessionary environment where business economic activity is going to slow down. People may be controlling their spending. We may even hit stagflation, which is essentially like high interest rates, high unemployment, and low growth. And it could be, it could be some time before the market really takes off again. So that's my opinion on these things. Just wanted to share this with you. I think the big news though today is that we have a big scare coming out of China with Country Garden saying that's the first and the biggest property developer in China. They're saying that the profits went down 96%. So I think that's a big deal. So love to hear your thoughts on these things. Do you think, this is the question, do you think we're going to retest and hold this S&P at say 3,600, or do you think we're going to go below than what we've seen before? So that's a fundamental question. Are we going to go lower than what we've seen already. So love to hear your thoughts on this one. Thanks again for watching, and I'll catch you in the next video.